Let's get another check on Intel. The stock's still higher, almost 1.5%, but off the highs after reporting earnings results moments ago. Let's bring in Bernstein Research Managing Director Stacy Rasgon. Stacy, this is a tough report for me to parse. Revenues beat, but EPS is a miss. Margins seem to be a miss, but it's not clear if that is really in the mix for the EPS issues. And then we've got the CEO, relatively new, coming out saying more about the direction here, but it's not clear to me how different this is from what previous management might have done under these current circumstances today. How do you parse it?
Yeah, you bet. So I think it's different than what prior management would have done. I mean, clearly Lip-Bu was cutting, like Pat was sort of the opposite. The print itself is actually okay. Like the revenue is pretty good. The EPS was hit there. They took some charges in the quarter. They've got some tools. They've just got too much equipment. They're writing it down. X the charges, it was actually a pretty good beat in the quarter. The guide is a little strange. So the revenue guide is actually quite good. The gross margin guide is light. I suspect that it's either mix or probably more outsourcing that's driving that, but the gross margin's light. The EPS guide is below, even on a revenue guide that's pretty strong. They're making some other operational changes, so they're cutting OPEX and CAPEX. The targets for this year are still the same as they were last quarter, but looks like those are set. And they're delaying some future projects. So they've canceled, looks like, the Germany project and the Poland project. They're closing down their Costa Rica back-end facility. And they're delaying their Ohio plans further. So that has implications. I think investors will want to know, maybe for some other stocks, like what are their CAPEX plans like for next year. But overall, I would say like it's a mixed print around this. It's a little messy. At a minimum, the revenue outlook for now, we'll see how sustainable that is. People worried about pull forward and everything. But for now, the revenue outlook at least looks pretty decent.
So what is the next potential landmark catalyst for the people who are trying to see, is there a point at which we can buy this stock? What would be the proof point from Lip-Bu and from Intel to say, okay, well, maybe this turnaround is coming on apace?
Yeah, no, it really probably is around the next generation processes. And so again, 18A is supposed to be launching and ramping at the end of the year. Again, their margin guidance to me suggests that they're doing more outsourcing. So we'll see how that outsourcing versus internal manufacturing goes. But it clearly is the process roadmap. 18A, attracting foundry customers, I guess eventually like ramping 14A. There's been a lot of question of whether or not those processes are viable. I would say at least in the slide deck, I think it's on page 5, they still have the logos for 18A and 18AP and 14A on the page at least. So at this point, I guess those processes are still there. But investors are really going to want to know how successful those are going to be. Like, what does that volume look like as it ramps? And then can they attract any customers? Those are probably like the structural proof points above and beyond just, is revenue good or is it bad? Because right now we don't know how sustainable or not sustainable that would be.